this has led to some really good buying opportunities on these stocks, and I don't think they're done yet. Should you be placing your bets on gambling stocks such as Penn National, MGM Resorts, and Draftkings? I say yes, but I'm not all about putting it on black or red, and therefore I have a few stocks in mind to consider over others, and even an ETF for those of you who like the industry but would like to hedge your bets a little bit better. But before I get to more ridiculous puns and potential dad jokes, let me welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic, and I've made it my mission to help you own it and make some money in the process. So if you'd like to see more content like this, please consider subscribing and smashing that like button. I don't know why people say smash it. Whatever did it do to you anyway? Did we ever try being nice to the like button? Either way, I would appreciate a thumbs up to help support this channel. Anyways, it's no secret that the gambling industry has been on one of the hardest hit areas in the market since the Rona, and it's only been until recently that things began to show signs of actual recovery. Stocks like MGM Resorts and Las Vegas Sands has fallen as much as 80% during the crash, as the level of uncertainty increased, and there was no real answer as to when it would reopen just 6 weeks ago. Yet now we are finally seeing some glimmer of hope, and not only that, but some really good signs that people are seriously itching to get out and have a good time. Or you all have a serious gambling problem. Maybe both. You bunch of heathens. Nevertheless, this has led to some really good buying opportunities on these stocks, and I don't think they're done yet. The demand to take risk and spend money is more than likely at an all-time high, with the world stuck at home for the past couple of months. Legal gambling is the perfect vice to blow off some of that steam. Casinos are starting to open across the US and even the globe, but with all the proper precautions being set in place. Nevada finally approved reopening plans, and under new guidelines, casinos will be limited to 50% occupancy. Conventions will be limited to 250 people. Restaurants will have limited seating and allow for appropriate distancing. Seating at table games will be limited as well. With blackjack, for example, seating will be limited to 3 players. Chairs will only be permitted at every other slot machine as well. Having said that, people are driving some crazy distances and waiting in long lines to risk it all on Texas Hold'em and finally scratch that proverbial itch again. Now, while it won't be business as usual for quite some time, we are beginning to see some signs of recovery. States like Louisiana and Mississippi just opened up last week and are already showing signs that the demand is real. Ben Koff, Vice President of Marketing at the Scarlet Pearl, stated that the start we have had between the casino floor, our outlets, and our hotel keep up, I think it's very good to say that the Gulf Coast is back in action. He goes on to further say that if this is the reaction we are getting from Mississippi, imagine the response when Vegas and even sports get back into some sense of normalcy. Which begs the question as to which one of these companies are set to thrive as many of these areas open back up for business. Well, I have 3 stocks that I like in this industry in particular, and a bonus ETF if you're looking to play this a little safer. Now, just a quick disclaimer here, as these, in my opinion, are worth dollar cost averaging into, and it will likely take patience for the big payoff, and my time horizon on these is about a year. Some pullbacks are likely, but I ultimately think these are still very much undervalued given where they are. The first one is going to be Penn National. Ticker symbol PNN is priced at $30.38 per share as of this recording. Once things really start to open back up, I think this still has room to run over $40 a share in my opinion, but I don't think it stops there. Their investment in Barstool Sports is where I think things will really pay off for Penn. CEO Jay Snowden was quoted as saying, "The company's long-term growth strategy remains intact as the company moves forward with projects like Barstool Sports app." Just recently, Penn took a 36% stake in Barstool Sports for $163 million in cash and stock to help grow its sports betting and entertainment offering. By 2023, the company could pay another $62 million to increase its stake to 50%. Barstool has an audience of 66 million and growing. I myself have become a huge fan of Davey Day Trader, and the value he brings to Penn will be incredible. Penn will have its Barstool Sports betting app running by the third third quarter, and they believe the app and the Barstool database can be worth $10 to $25 per share of equity over time, which is absolutely huge. Penn is still down 25% from its high prior to the crash. I think it could very well double from where it's at now within the next year. Speaking of sports betting, Draftkings is the gambling stock on this list that I think probably has the most potential here. Ticker symbol DKNG last traded at $29.11 as of this recording and has been moving quite well since going public to NASDAQ. Sports betting is only going to continue to grow as sports begin to start up again. Many younger investors are beginning to like the business model of DKNG against that of traditional casinos with large overhead costs as well as social distancing restrictions that they've been experiencing, and that DraftKings doesn't have to worry about that as they start to reopen. Younger gamblers like sports and are comfortable betting on their phones. Investors were thoroughly impressed that the company's first quarter DraftKings revenue was up 30% to $89 million and showed a pre-Rona year-over-year gain of 60%. What I also found interesting was that there are 14 states with about 24% of the U.S. population that have legalized online sports gambling, led by New Jersey and Pennsylvania. The biggest opportunity coming out of this crisis, I think, could be that states such as California, Texas, Florida, and New York, who haven't legalized online sports betting yet and have taken state budget hits because of the Rona, may force them to consider this as an option to build them back up. Fundamentally, this is a little overvalued as of right now, but looking forward, my bullish case for this is around $75 a share this time next year. It's worth noting that DraftKings is also working their way in smaller but growing market for online casino games like slots, blackjack, and craps, and New Jersey has become the leader in that market. Now, before I get to the final stock on this list and ETF to consider, I'd like to invite you over to check out the Chaos Crew. By clicking the join button next to subscribe, you will get a daily watch list from me that gives you a snapshot of what the market is doing that day, along with some stocks that have potential for some decent moves. For $4.99 a month, I think it's an incredible value and it will continue to support this channel. So I hope to see you there. Next up is going to be MGM Resorts, ticker symbol MGM, and as of this recording is priced at $15.90. I first brought MGM to this channel as one of the top 3 underrated stocks about a month ago. Then it was priced under $12, and I still like it now for a lot of the reasons I liked it then. Tons of insider buying on this thing over the last 8 weeks, which only instills confidence that their own people are still optimistic of the direction of their company. I've always loved MGM, with its incredible balance sheet and its healthy liquidity to get through the temporary downturn and the long-term potential for not only its business in the US, but also its Asia market as well. Macau, China, aka the Las Vegas of Asia, is the largest gambling city in the world, has been open for some months now, but with less than desirable results. The low traffic is most likely due to the travel limitations that are set globally, and once things start to pick up again, MGM stands to benefit greatly from this. Currently, the stock is down over 50% for the year, which in my opinion gives this plenty of room to run still. I can see an easy double from where we are with MGM this time next year, and I'm pretty confident on that call. Are these 3 too risky for you? Perhaps consider the ETF BJK. As of this recording, the ETF is priced at $32.55, and this ETF is comprised of many companies related to this sector that include Wynn Resorts, Las Vegas Sands, Galaxy Entertainment, and yes, even MGM. If you're optimistic about this sector but are hesitant to open yourself up to more risk in investing in an individual stock, this might be the option for you. Look, the entertainment industry will be back, and the ETF is still priced 30% below where it was pre-crash. So this may be a viable option for you if you see the potential the industry has as far as a return. That being said, this does limit you on potential return as it compares to the investing in some good quality companies that have just been beaten down. So determine what your level of risk is as well as your time horizon before determining which stock is for you. So let me know what you think about these stocks in the comments below. Do you have other stocks in the gambling industry or the entertainment industry that you prefer over these 3? Let me know. I want to hear your thoughts as well. And I hope you enjoyed today's video. And as always, you heathens, I will see you all before the bell, and B Smith is out. Hey guys, thanks for sticking around to the end of the video. If you want to see how Facebook is flipping Silicon Valley on its head and changing the way that we invest forever, click this video here. If you want to see the top 10 stocks that millennials are investing in right now, click this video here, and I will see you in the next one.